And it is time for Talking Numbers. The S&P has seen some positive momentum the last 2 months, up about 10% in 2-month period. But even given the recent run-up, a little more than 2% of stocks on the S&P are trading within 5% of their 52-week lows. That is a statistic my next guest thinks money managers are paying attention to. He says that about half of U.S. mutual funds will end their fiscal year in the next 3 months. And that puts the managers running those funds under pressure to sell any underperforming assets, a move he thinks could present investors with a buying opportunity. Joining us now to talk about it is Pankaj Patel, Managing Director of Quantitative Strategy with Credit Suisse. Great to have you on the program. Thanks so much for joining us.
Thanks, Maria. Thanks for having me.
Always good to see you. So what is the selling pattern you found at the end of the year?
Usually, as you mentioned, 50% of the mutual fund managers' year end is from now through December. So when they report their holdings, they want to make sure they have stocks which are not losers in their portfolio. So they'll be selling stock which have high losses, and they'll be buying stock which has gone up quite a bit before they report to their clients.
Okay. And so is it enough to just look for any stock trading near the 52-week low, or is there more criteria that a stock has to meet to be on your radar?
There is more than 52-week low. So first, we look at stock which has gone down in last 52 weeks. For large cap, for example, I'll use that as an example. We use stock which has gone down to at least 25% or less compared to 52-week high. And also, we remove stock which have more recently reversed. Means if the stock is within 15% or has moved up more than 15% from their 52-week low, we remove that. Next criteria we apply is the valuation criteria to make sure we're buying still cheap stock. So we use traditional value and relative value factors. So
lumping all of these stocks that meet your criteria into a basket, how did the portfolios tend to perform versus the S&P?
We have been highlighting this basket since 2005. In last 5 years, every year from October through November, from November 1st through January 31st, this basket of stock has outperformed S&P by at least 2 to 14%. The biggest run was in 2008, 2009, when that basket outperformed S&P by 14%.
Okay. So what's the bottom line here, Pankaj?
Bottom line is investors should realize that this is a behavior done by institutional investors, and this creates an opportunity, and they should use this opportunity to take gains.
Okay, we will leave it there. Pankaj, always great info from you. We so appreciate it. Thank you.